So how are you moving into different markets? Like, what are some of the challenges with that? You started where you're from, but now you're going to Texas and you're going to, you said that you're moving to Atlanta and different things like, and then you're doing different product types as well.
Yeah.
So talk about navigating that.
So relationships, man, is everything. I think when I was coming up in Milwaukee, one of the things that I did was just build those relationships. I was networking. I was at every event. You couldn't miss me. You could not miss me. I was everywhere. So I took that same model, but now I'm doing it on a national scale. Everything in DC, real estate based events, I'm there. I'm not there as much now because I've been, head down, but I'm in those. Atlanta based events, I'm in that. Houston based events, I'm in those. Birmingham based events, I'm in that. So I look for the macroeconomic trends that I like. Population growth. I really like red states and blue cities because it allows for flexibility and getting out tenants that may not pay, right? I'm not saying evict folks. That's not what I'm here for. But at the same time, places like Atlanta isn't as bad. Atlanta's DC. Let's use DC for example.
Well, you said red state and blue city.
Yes, those are places like Atlanta I like.
Like Houston, Atlanta.
Houston,
Georgia is now
Birmingham.
Birmingham.
All
blue state.
All blue states, red cities.
Yeah.
I mean,
traditionally, Georgia's not a blue state though.
No. I mean, blue cities, red states. I may have said it the wrong way.
So Birmingham would be.
Yeah, Birmingham, Houston, and Atlanta.
Houston.
Yeah, for sure.
New Orleans.
Yes.
Stuff like that.
Yep.
I really like blue states, red cities. Blue cities, red states, because the higher level laws allow for more flexibility. Like a place like DC, for example, there were people that literally DC prior to the pandemic, you can go rent an apartment, never pay your rent, and you don't have to get out for at least 7 months because that's how long the process takes. Like I know people that lived in the building that I lived in that literally leased it and didn't pay rent. They just lease it out every summer so they can enjoy the rooftop. And they just burn up different people's things. Like, okay, your name this year, we all gonna live there. Your name this year, we all gonna live there.
Are there any major cities that are run by Republicans? I don't think so, right? Every major city is run by Democrats. You really think about it.
That's a good question.
Chicago, LA, New York,
Miami,
Houston. Miami is a Democrat. The mayor's a Democrat. I don't think there's any major city that's interesting. I just thought about that.
Yeah.
No major city has
Very
Republican
true.
control.
Very true.
Chicago's Democrat.
Even if it's in a Republican
LA,
state.
yeah.
San Francisco,
same.
yeah,
Philly,
yeah.
And Pennsylvania goes back and forth. But those cities, those states that have those very like stringent laws, like a DC, for example, I'm not the most fond of, right? Like during the pandemic, there were people that literally lived for over a year just because of the system. And it's like, you're not paying any rent. As a landowner that has thousands of units, I don't want thousands of units in a place that I can't get people exploiting this system out. In Wisconsin, you get somebody 30 days. All right, boom, you go through the process. Atlanta, even quicker than that. And I'm not saying we should exploit it either, but from a business perspective, it doesn't make sense for me to be in a place where X amount of people don't pay rent, especially as I'm rising. Like when I get bigger, of course, maybe I could deal with some of that drop. But right now, I'm focused on cities where it makes sense financially.
So you moved throughout the cities. I know the HUD is involved in the Birmingham situation. There was $370 million allocated for the developments. Is it a situation where you can now again go back to HUD and do the same type of proposal in a different city?
Absolutely. So I'm a finalist for 3 cities right now.
See, I knew it, man. I knew it.
I'm a finalist for 3 cities right now. I got a call yesterday about 1. We'll talk about the cities offline. Yeah. So the strategy and the game plan there is, if let's say once a year, once every other year, I can pick up one of these, Birmingham will be further along. Mm-hmm. Now I'm starting on that. And if each one is kicking out 1,000+ units, you get 3-4 cities. I mean, by the time I'm 34 now, by the time I'm 42, 43, I'll have thousands of units under my belt that I've developed and really just starting to enter my prime.
Yeah. On your financial map, does the percentage change with the amount of units, right? When you started at the 140, you had your percentage that was put in. Now you're doing 1,100, but you have partners.
Yes.
How does that change?
Great question. Yes, it did change. So each city that you go into, their housing authority so all of these are public housing redevelopment. So think Cabrini Greens, think Marcy Projects, et cetera. We're taking the projects and creating mixed income communities. Because if you think about the projects, they were low density. So it's 30 acres of land with 300 units on it. That same 30 acres could do 3,000 if you really wanted to, right? But you don't want to go that dense. But that's just an example of like what you are going after. So because the housing authorities typically own those lands, whoever is at the housing authority, they kind of dictate the negotiation of like the housing authority and developer in those terms. The housing authority gets X percentage, and then the developers gets Y percentage. And right now, Integral and I are splitting that percentage. Okay. But it's very favorable. Like it's pretty close to where it should be. And the way we work, they come, I'm driving, but they're there every step of the way in the passenger seat. So I'm able to learn from it in their experience. They've developed, built, and managed over 10,000 plus units. They've been doing this. They created the model. I'm learning from them, but I'm driving the ship at the same time. So yes, I have to share in the economics, but $300-400 million deals a pop. I don't mind sharing. We can figure it out.
So talk about access to capital. That's something that, Don Peebles, a lot of people have talked about. What is your thoughts on access to capital as far as on the real estate development side, and what's your personal experience that's trying to get access to capital?
The money on this commercial real estate side, like I said, the money is going to be there. If you got to deal to work, the money is going to flow at the end of the day. Now, the terms for the money, talked about before, that's where it gets a little tricky. I'll say in the wake of George Floyd, there was a 18-month period, maybe even a little. I mean, it's still kind of there, but it's scaling back where they were throwing money at black developers.
Who's throwing money? Like BlackRock?
No, that's a great question. So like the PayPals of the world, when they was giving out all of the I want to invest in black communities, primarily went to CDFIs, Community Development Financial Institution, that we talked about last time. There's some national CDFIs that govern some of those funds, and they've been able to kind of distill those funds to us. So like Enterprise Community Partners, they're my equity investors on the Madison deal. They have a program called Equitable Path Forward. Their CEO just took over Fannie Mae. So that's the scale of like how big these CDFIs are. Now, they're one of their presidents, Lori Chapman, she created this program based upon all of that money that was coming in from the corporations that were trying to give to black dollars. And this program is specifically created to be able to, they have lines of credit for us from an operational business perspective. They have pre-development loans. So you can go out, each one of these deals, you need at least $500,000, anywhere from $500,000 to $1 million before you close. You get it all back when you finish, but you need that before you close. So when you talk about like capacity, that's one of the things too. Mm-hmm. If you have 5 of these deals going on at one time, you're going to need $2.5 to $5 million worth of capital just to deploy to that. Not even talking about your operations and nothing like that. So they have programs that are allowing for developers to be able to tap into those type of money that helps us grow and scale. But the flip side of it is that's all the, kind of feel good money that's going to flip. But to Don Peebles' point, black people don't manage big pension funds at all, right? I've heard him talk about it on y'all's platform. At the end of the day, we're less than 1% of all of the management. Black, brown, women, less than 1% of all assets managed. But if in New York, for example, with black, brown, and women is over 50% of what's going into that pension fund, why is it less than 1% of us managing or having access to manage those funds? What is the governance around that to say, oh, you are not capable enough to do that? That's still a really big challenge to be able to even go from someone like myself that's a developer that's established to get into fund management and be able to allocate to either my developments or other developers in the same way that some of these traditional majority firms are doing with no problem. So that's really a challenge that I think needs to be addressed. And I'm doing my job to do it. So Reinvest is a platform that I'm creating now. It's a crowdfunding platform that democratizes commercial real estate investment. My mother can't invest. Your parents can't invest unless they are accredited historically. But you've seen crowdfunding start to grow in the real estate space a little bit. So I'm doing a Regulation A plus. We can raise up to 75 million. I'm gonna put a portfolio of deals together and have people invest in that, and backed by the best of the best in the country that are doing it. So it's secured by those funds. I mean, by those firms, and we underwrite the deals. We co-invest in the deals. It's not like investing in a company. It's not like investing in a onesie deal. Like we are, putting together sophistication in a way that the marketplace has not seen. So that's one of the ways that I'm addressing the access to capital challenge for emerging developers that are like me and coming up behind me too.